And finally, candlestick formations work great. However, our focus is not on identifying them and trading based on them. All right, it's really great that you know all the candlestick formations, because this is all additional knowledge that adds up to your trading. It adds value to your trading. So again, I am not telling you don't learn all the candlestick formations. I'm just telling you that you don't need them for sure. Right? Our main focus is to identify market structure, spot our key levels, the lower highs, the higher lows, the formations that we already learned, and then use the candlestick knowledge to identify pressure, rejection, or indecision. Again, we come to at the beginning of those three super important candle behaviors. Is it showing pressure? Is it showing rejection? Or is it indecisive? So struggling to pick a direction. All right. So that is really, really, really important for you to understand. And of course, when the market is in an area of a higher low or a lower high, right? So this is our area of interest from which we want to take a trade. Then we will actually monitor for that behavior. We're gonna, for example, jump on the hourly or on the 15-minute time frame. We're gonna see, okay, so do we have rejection from that level? Because a rejection will potentially confirm a potential reversal. And do we have indecision? Indecision will kind of show us that the market is starting to struggle to continue higher or lower. And of course, do we have pressure? That is going to show us that potentially the market is going to reverse, right? Super important. And of course, remember that you need confidences in order to take a trade. Our biggest confidence will be market structure and the formations that we already learned. And then when we look at candlestick formations, this is going to combine all together with everything that you learned so far, and it's going to build you an edge. All right. But again, I repeat myself, we don't base our edge on candlesticks. It's just a nice addition and a nice value to your trading. So I'm just going to jump straight into the charts right now just to show you a very quick examples on how to train your eyes on spotting candlesticks and how to actually identify how a daily candle, for example, consists of 6 4-hourly candles and this sort of concept. All right, so we're on to the charts right now. This is Euro JPY. This is actually fresh analysis from this week's weekly outlook and setups. So again, as you can see, when you open the chart, you have the candlesticks, but are you supposed to identify each and every one of them? Not really. Again, all you need to identify is rejection from the top, rejection from the bottom, and potentially indecision that shows you that the market is just not ready to pick a direction. Okay, so again, as you can see right there from the top, the market strongly pushed into the highs, started to reject. Then the next candle is a big rejection. That shows us a strong push to the upside, but then a lot of sellers enter that market and push the market down. Then the second candle, you have a second push. So the market again tried to push up, but again failed like really miserably because this is a big wick on the top. And then what you see is following strong pressure to the downside in the form of bearish engulfing candle. And what we do, we actually break all the structure on the left. This structure was broken, this structure was broken. And what is this formation actually? This is a potential MSS formation, right? We have an uptrend, the market breaks all the structure, pulls back for a retest, and have a look at that candle right there. So how can you actually imagine this candle, that is a 4-hourly candle, to look like on the 1-hourly time frame? Okay, so this candle right there is comprised of 4 hourly candles. So what I imagine is the market starting right there. Again, this is your open, right? Again, make sure that you know where your opening closes. So we open right there. The market starts pushing to the upside with one strong hourly candle. Then the market continues to push up, but potentially starts to reject a little bit right there. Okay, then for example, the market forms a little bit of a bearish candle with a wick on top. So something like this. Oh man, this is gonna be hard. So this is a candle with a wick. Let me then make all the bodies a little bit bigger. Okay, so we have something like this. We open, we push to the upside, we push to the upside again, then this candle rejects, and then we have a strong bearish engulfing candle that actually closes below the open of this first one. So this is how I am imagining this on the hourly time frame. How do I imagine it on the 15-minute? Well, again, we build the story. The market opens, forms a little bit of an uptrend, then consolidates on the top, wicks above, and then we start to pump to the downside and actually close below the open right there. So again, if we take this information and we jump on the hourly time frame, what do we have? Yeah, it's slightly different. You will never get it exactly right, but it's important to identify that the market started with this bullish candle right there, right? It strongly pushed into the upside. It rejected on top, as I indicated, and then you have this strong bearish engulfing candle that actually closes below where the market opened right there. So those 4 candles right here, if I actually should be precise, those 4 candles right here, this, and this comprised that 4-hourly candle. And then if I drop to the 15-minute, you're going to see a little bit of an uptrend, consolidation on the top, and then a potential push down. So this is a really great kind of exercise that you can do. For example, let's say you are looking after this break of structure to the upside, pullback. So you want to identify when the market is actually about to reverse. Okay, so up until this point, you have that strong pressure to the downside. So do you want to buy after this big bearish engulfing candle? No, you don't. All right. Then you have this candle, but what does this candle show you is a wick on top. What does a wick on top mean? That the pressure is coming from the upside, right? And then what do you have? The market sliding to the downside, and just pay attention where the wicks are. Top wick, top wick, top wick. There are some from the bottom, of course, but those are more or less slow, indecisive candles. Nothing much. Then we have this. This is really nice because this is actually when the market retested the broken structure and strongly created a bullish rejection, right? This rejection comes from the downside. So how do we imagine this candle? Again, the market opens, pushes to the downside, rejects at the bottom, and then closes a little bit bullish. So if you drop to the hourly, strong push to the downside, rejection, and a strong bullish close. What is this formation again? That we learned just in a bit. This is a morning star formation. Strong bearish candle, indecision at the level, strong bullish candle. Okay, so this is first signs that the market is about to reverse. And then we're going to go on the 50-minute and we're going to wait for a clear break of structure. But again, on the entries a little bit more. This is not a clear break, so we have to wait a little bit more. Okay, so here is the break of the market. And if I jump on the hourly time frame, you have a little bit of a pullback, bearish candle, but then the market emerges above. So this is actually showing you signs right now that we are reversing. And potentially you can be looking to, for example, take your trade from here. And then, for example, take it to the top, right? Wow, what was that wick right there? So this is possibly news, but again, we didn't get stopped out, so potentially the market is going to continue right now. But again, I really hope this is clear. This is a really nice exercise that you can do by identifying rejection, by identifying engulfing candles. Have a look at that big pressure. So how can you actually enter before that big pressure? So go to analyze the candles. How do they develop? How do they look like on the hourly? How do they look like on the 50-minute, right? And this exercise is actually going to build the visual skills that you need. So once you actually see a rejection, you're like, okay, so something is happening right there, and the hourly potentially showing us a reversal, and we can expect the market to reverse. Okay, so that is the little exercise that I wanted to share with you. I really hope you are going to apply it. And right now, let's just jump straight into time frames, and then the real fun is going to begin.